All right, what's going on, guys? It's your boy, the Oil God, TOG, and I'm going to make some educational content for you guys. This is going to be a start of a series where I go into depth in regards to pretty much everything I know, what I've learned over the market for years. So I've been trading for a very, very long time. I've started off jumping around with strategies as well, not as much. I did find the two-leg here mostly by myself, and not really any types of help finding the two-leg. And after doing some testing, I was able to break down what some good two-legs look like, what some bad ones look like, and build a strategy based off of that. So we'll jump into the basics here. If you're more of a novice, it's definitely going to help you. If you're more immediate, advanced, been here a little bit longer, might be more of a good refresher, and it will show you how I look into the markets here. So we'll dive into the two-leg as we go along. We'll start moving on into like structure, holding trades, targets, psychology as well. That's definitely going to be important. That's probably one of the biggest ones. Most people can enter a trade, but managing your risk, knowing when to take yourself out of the trade once target hits, not over trading is a different beast in itself. So from the basics here, we're going to go to tradingview.com. We're going to go to indicators. From indicators, we're going to look up this one here, DR/IDR V1 by the master. We're going to click that. We're going to add that to our charts. You're going to see this box. So what this pretty much is it gives you a range for the 1 hour. It starts off at the 9:30 candle and then closes off at the 10:30 open candle. So 10:25 open, which closed at 10:30. We're using the 5-minute time frame here. And pretty much what you want to look for is a break of this level here, this whitish line-ish line, I guess you can call it. So we want to look for price to break above. If it wicks above like this one does, you can see there's a small wick above. The body doesn't close. Even this one here, it gives you an edge that price can move towards that direction. If you trade in strictly that direction, you will make money. It is more of a lower win rate strategy, but over time, yes, you'll be profitable strictly using the direction. For this is the direction, price breaking above this line, and you look for trades in this direction. If price breaks below this line, like it did here, you look for trades in the short direction, right? So these are long trades up, short trades down, and the moment the bar closes outside body-wise, you do have a higher probability of that direction holding and working out. Again, it doesn't always work out, but it just gives you good buys for the session, especially when price looks clean, right? So that's the first thing you want to do, is add that DR/IDR indicator to your page. Once that's set, just know as a beginner, you want to trade in the direction of the box. It's going to be a lower win rate strategy, so get yourself mentally prepared for that. You're going to lose some, but over the long term, you will win. That's pretty basic, right? Once you do that, you're going to go back to indicators. You're going to go to SVP, session volume profile. You're going to add that. And from here, you are going to update the settings here. So we're going to click on this. Colors really don't matter, but we're going to have to do 2 of these, the SVPs. And looking at my settings here, we're just going to go custom first. So sessions, custom. And then from here, we're going to put in 8:30 to 15:55. Right, so that gives us a session which is going to be more so the New York session. As you can see, this is transition time, right? So Euro is between, it opens at about 3 o'clock, right? 3 o'clock. Its box closes at 4 o'clock, sorry, 4 o'clock. Then we have transition, which kicks in around 8:30, up until New York session, which kicks in at 9:30. Right, so you want to add, that's the details you want to put, 8:30 to 3:55. Exchange is fine. We want to put volume area as 100, and then we want to do that as ticks per row, and the row size is going to be 8. All right, so that gives you the breakdown of the volume POC as well. Extend volume POC right. What this does is, if there's an open volume POC, price will fill it in the future sometime. Again, it's more of a detailed breakdown that I'll have to go through with you guys, but for now, you can just mark this off. Just see how price moves towards this volume POC in the future. Examples right here from Thursday session, we had the New York volume POC, and eventually price came back to fill it. This is kind of like a magnet for price. So that's the first one that we're going to do. We're going to redo it again. Go back to indicators, SVP as well, session volume profile. And this time we're going to do it for the Asia session. So we're going to go back to the settings here for the second one. And this time we're going to go back to custom. We're going to go back to timing wise 18:00. So that's 6 o'clock when Asia pretty much opens up, to 8:25, which is more so around end of, you can call it end of Euro transition time starting. For this one, this is going to be everything else still the same. Volume area is going to be 100, row size also 8, and then you want to extend that volume POC again. Same thing applies for the Asia session. It will still be magnetic. All right, so now you have volume POCs. Now you have DR, which is the 1 hour box. You know exactly what my page looks like now. That's kind of the start of how to get set up. And the follow-up points that we can talk about is the 2-leg. So what's a 2-leg? A 2-leg, for the time being, I'll turn off the volume, the session volume profile. But yeah, what's a 2-leg? 2-leg is pretty much just a pullback in price, right? So price is going up in a direction, and then price pulls back. So let's say price is going up, going up, going up, and then we pull back. This is a 2-leg, right? There's a 1 leg, there's a stop, there's a 2nd leg, and then we push on up is what we're looking for. We want to take advantage of this move on up. So that's what a 2-leg is. And what is the purpose of a 2-leg? The purpose is to give you an entry so you're not buying at the highs, right? Price moves up in a trend or a pattern. You don't want to buy right up here because price can pull back like it did here. We want to buy once we get a 2nd leg pullback, a 1, a stop, a 2. This is where we want to take our entry once it holds. So that's the purpose of a 2-leg. It's to give us an entry so we're not buying at the highs. And also for this DR indicator, just double tap on it. You can turn off these, which are show standard lines, standard deviation lines. What that pretty much is based off the New York box. It shows you how far price is from that box. So 0.5, that's 0.5 standard deviations away from this red line to this red line. And then this is the 1 standard deviation away from this line to this line. You can just turn that off. You don't need to use that for now. That is a little bit more detailed, but yeah, leave that off. So back to our discussion on the 2-leg. How does a 2-leg form? Well, pretty much best way to show you guys an example, but 2 legs form by the fact that we have a push on up, like a green bar, and then we have a green bar show buyers. Then we have a red bar, which is next, which shows that sellers are stepping in. And then we have a next bar after the first initial green, then the 2nd red. Then we have a small stop green, which shows you that buyers are still present. And then on the 4th bar, we have another red bar down, which shows you that sellers are taking over, right? So it's going to be 4 bars just for your normal 2-leg. The legs themselves can be longer than just 1 or 2 bars each, like this one here, right? We have a 1, we have a stop, we have a 1, 1, so 2 red bars for the 2nd leg, and then we have an entry, right? So for this one, don't mind the timing, again, where it is in the session right now. Let's just focus on the setup itself. We have a strong push on up, price is moving up. We have a stop bar here, right? So this is gonna be we have the first leg here. So we have a pullback, which takes over this buyer's pressure, turns into selling pressure. We have buyers step back in, showing they're still alive. And then we have sellers come in, showing that they're stronger. And then buyers retake both of these sellers here. That shows that strong buying pressure. This is for, if you're looking for longs, moves on up, right? So that's what a 2-leg looks like. We have pretty much a move on up with a green bar. We have a retracement, which shows sellers. We have buyers holding, then we have sellers stepping back in, and then buyers at the end of it all just crush both of these sellers. That's what a 2-leg pullback is. So this is a very good example of a 2-leg pullback, right? 1, we have a nice small stop green bar. The small green bars are our favorite, not saying that the big green bars can't work, but these stop bars, these stop green bars are much, much better. And they'll give you better continuation in price just based off my experience, right? So 1, stop, 2, Where do we want the entry bar to open? Ideally, we want it to be exactly like this. Push on up, first retracement bar opens where this one closes. We get down, the stop bar opens where this one closes, and then a second leg on down as well. And we want an entry bar that opens ideally where this one closes. That's kind of like a perfect two leg, right? Rarely will you get those. When you do, take advantage of them, but that's a good example of a two leg. A bad example here is going to be something like this. We can look at this one here. A one, stop, two, entry bar. Like, look how small the entry, the start of the first leg is, right? The green bar to start it. Super small, one, stop, two. Also, this one here, we want it to be super tight, super clean. We don't want it to be outside of range like this, right? This is kind of wavy. We wanted this bar to open where this one closed. We wanted this bar to be down here, small bar as well. And we wanted this bar to open exactly where that one is, closing. And then we want the entry bar just to be exactly like this, opening where this one closes on the second leg, right? Not a wavy one. We want a super tight one. One, stop, two. This is a bad example of a two leg. Doesn't mean it can't work. It definitely can, but that's not the ones that give us the highest probability. Now, how about this? One, stop, two. Yes, this is a valid two leg. However, look how even these legs are. One, stop, two. Much even in size and length of the retracement versus this. One, stop, two, right? We have an extra long first leg, a stop bar as well. That's kind of outside of this this box here on the first retracement, and a second leg. And this bar here as well. It lines up. You can still take it, but again, it's not super clean like this. This is more of a riskier two leg. It can definitely work. This one as well. If we start it from here, one stop two is a riskier two leg. This one here, one stop two, super long second leg, riskier two leg. We want the even ones. So something like this one here is also valid, right? This one unfortunately doesn't open where this one closes. That's completely fine. That's not too much of a big deal. We want the retracements themselves to look clean. So this first leg, we have a stop bar being small. It lines up with this close, a second leg as well. And ideally you wanted this bar to open beside this one and give it a push on up. This is an inside bar. This is going into details. What this means is that price can give you another leg down before it pushes on up, right? So we have a one, stop, two, inside bar gives us a third leg, and then we push on up. So overall, I mean, still a two leg here, right? We use a 20-point stop. So this is our position tool. We use a 20-point stop for that very purpose. In case we get an inside bar like this, and in case we get a third leg down, the 20-point stop will protect us. And what I usually like to look for is actually entries on these types of bars. The one after the inside bar that holds, just to give me a better risk to reward ratio. But you can definitely take it like this, right? So here's some examples here of a clean one, of a not so clean one, and of one here as well, which is kind of like a medium one in terms of cleanliness. Then we have something like some over here. This is another trade for this week, right? We had a short confirmation here. Price is moving back. We have a close here, and then a pullback. One, stop, two. Look at that retracement. These are the types of clean retracements we want. Entry bars may vary. This one might open where this one closes, which is ideal. Sometimes it might open a little bit higher and close a little bit lower. Again, it's not always going to be perfect. Rarely is price ever perfect, but your biggest focus should be on the retracements themselves. These are what matter the most, not really this one or really this one. You want it to be cleanly set up like this. So we have a one, stop, two, and then an entry. You took this, you got paid on that short here. Now another one we can look at, which is going to be like this one. This is a bad example of a two leg. Right here we have it. Yeah, it opens where this one closes, so that's good. That checks our box. The stop bar, yes, it opens where this one closes of the first retracement. That checks our box. Now it comes out of range here a little bit, right? So we wanted that to be tight, not this extra bar that we have right here. In the middle of nowhere. We want it to be this one, stop, and then have a retracement down right away, not pop up and then down, and then enter here. This is a beautiful two leg. If this bar is not here, with it there, it is more of a curved kind of wavy two leg. right? Again, doesn't mean it can't work out. This still worked out. It still hit target. They're just not my favorite types of two legs to take, but it doesn't mean that they can't work, right? So now you kind of have a more in-depth understanding of what I like. Here's another bad two leg. We get a push on up. We're waiting for our retracement first. One stop outside two. Like this is super wavy as well. This bar does not open where this one closes, which we ideally want. We do have a small stop bar, which is great. And this second leg opens well outside of this range here, right? We want it to be one stop, two straight down, not open up and then come down. But again, this also would have worked. You would have locked some money in for the session for the day here. Now that's a couple examples for you guys. Obviously, I'm going to break it up a little bit more without taking anything else into account. We can look at this as well. Like again, not looking at structure, not confirmation, nothing. We have a one. We do have a stop bar, which is an inside bar. Inside bar is between this red bar, which means it can give you another leg down. So we can restart the two leg. One, stop, two. That's a clean two leg, right? If we have a look at this bar here, let's just say we have this first leg down. We have an inside bar. So we restart the count of the two leg. This bar, which is the first retracement leg now, opens where this one closes. Perfect. This bar here, the small stop bar, which is nice. That's what we look for. It's not an inside bar between this red bar. It opens where this one closes, which is another checklist box that we mark off. And then we have a second leg here as well. Pretty even in length. We have this bar here, which opens as well. Slightly lower, but that's completely fine. Again, that's not our focus. Our focus is to make sure the retracement legs and the stop bar look clean. Look how sharp this is. One, stop, two, and then we have an entry bar. You could have waited for this one as well. You want a little bit more confirmation, especially if this one is not opening beside this closed bar, the red bar, the second leg, or if it's not a strong bar and it's a doji bar like this, which is an indecision candle. Buyers and sellers are pretty much undecided on which way price should go. So that is a couple of examples for you guys. Here's another one. How about this one? One, stop, stop, two. No, that's an extra leg in between. We don't want this green bar to be here. We want strictly this one stop bar and a red leg down, and then entry here. If this green bar wasn't here, this is a valid two leg, right? This one opens where this one closes. Stop bar here as well. Opens where this one closes on the first leg. Let's just disregard this bar here. Let's just assume this one opens lower, comes on down, and this one opens, the entry bar opens where this one closes. Beautiful two leg to take, and obviously it would have paid. Here's another one for you. Again, disregarding structure, things like that. Just normal two legs following the trend here. One, so we have a perfect first retracement one, right? This one opens where this one closes. The start of the two leg one. We have a nice small stop bar. We have a two. The second leg is lower than the first leg. That means we have a valid two leg. Only thing that's not good about this trade is the size. It's not really even. Again, it doesn't have to be to work out. That's more of a, I showed you guys a perfect two leg before. This is not a perfect two leg, but this is a valid two leg. We have a one, retracement, stop bar small, two, that's a second leg. This bar doesn't open perfectly with this one. Rarely will it ever, but this is a valid entry to take along with the trend. So that's a couple examples for you guys. If we're looking at maybe here Tuesday, how about this one here? One, stop, two, yes, valid two leg. This is not an inside bar. Why? Because this red bar pretty much closes aligned where this bar opened. If this bar was in between this bar, it's a inside bar, which means that it's not an entry for us. But one, small stop bar, two, second leg is lower than the first one. Entry bar is right here. You take that long. Like as you can see on a trending market, these will definitely work out much better. And recently, like for this week for oil, it's been super clean, so it's nice to see these. Here's another one for you guys in euro. One, right, first retracement. This one opens exactly where this one closes. Small stop bar. Two, this one, the second start of the leg does not open where this one closes. Again, that's fine. We just care about a clean, tight two leg on the retracements. One, stop, two. This bar here opens where this one closes. Valid enough. That's a good two leg. It aligns with confirmation as well. It's off a flush out wick, which means this was pretty much a red bar at one time. Buyer stepped in and turned it all the way to green. That's some strong buying pressure. So kind of more of a brief video for you guys, more of a summary video to show you what types of two legs I like. Of course, this is not the be all end all. I will go over more details for you guys as well, diving into structure, again, psychology, number of trades, targets, stop losses, things like that, adding to position, which is going to be key for you guys to succeed. I will go over all that. Hopefully this is a good introduction for you guys. I showed you how to set up the 1 hour range. I showed you the confirmation. I showed you the two legs I like. I showed you the two legs I don't like this one here. And ideally we want one stop bar in the middle, not two. And yeah, I showed you guys how to set up the volume POC as well. I'll see you guys in the next one. I'll be making these regularly. If you like this, appreciate it. Let me know if it helps. Again, we want small, tight two legs. We don't want ones that are wavy outside, tight ones that are super clean, super jagged, that give us nice clean entries that align with confirmation will be your best ones. And then also align with structure, which will be discussed in the next video. I'll see you guys in the next one. Lock in, stay blessed, TOG out, peace.